From an initial capital of 500,000 shillings back in 1984, it is East Africa's fastest growing bank, boasting a client base of 4.5 million people, 155 branches and a balance sheet growth of 70% annually.
I think we are being driven by two things. One, the business model. It's a large volume, low margin volume business. And so the bigger the market that we are covering, the better the economies of scale. The second one, of course, is the political integration that we are seeing in East Africa. And we are seeing this is becoming a single market. So from a strategic perspective, we see it's important for us to take position.
Equity Bank Group has announced a 43% increase in profit before tax for its first quarter in the current financial year, posting a 1.7 billion profit compared to 1.2 billion shillings for the same period last year.
The realignment that we've been making since the beginning of the year, we have seen now our Treasury Department bouncing light to compare with all the other banks, with incomes from board trading going up twice, and from the Bureau services going about 10 times. So that is one of the biggest contributor. The second one, of course, is the change of weather pattern in Kenya. We are now seeing our rural branches becoming very robust in terms of economic activities. And lastly, it's the recovery of our economy.
The group's focus is to be a one-stop shop for financial services, from insurance, which raked in 28.4 million shillings, money transfer, which brought in 18 million shillings, while its custodial services brought in 13.4 million shillings. Of note, though, is that the bank has scraped off its investment bank and is back to the drawing board.
We are looking at, do we have the right people to execute the strategy based on our customer base? Or do we get investment bankers who understand the equity model? And two, we're rethinking, do we have all the facets that we require to execute an effective strategy? So that is the debate, and we are on the drawing board. What I can assure you is that you see us with an investment bank soon.
Housing Finance, Kenya's premium mortgage lender, lies on equity's acquisition path, a subject that has led to speculation about a takeover by Equity.
The decision to invest in housing finance was informed by the strategic options that we have of collaboration. And as we said, one, Equity has the advantage of being able to mobilize low-cost funds, which if availed to housing finance would be able to transform it dramatically. Equity has a huge network of 120 branches, which would enable housing finance to roll out mortgage services to all parts of Kenya instantly without having to reinvest. And Equity itself would benefit significantly from the skills and knowledge and specialized knowledge that housing finance have built on mortgage in a very specialized way for over 40 years. So if you combine those aspects, and of course the benefits of sharing what you could call shared services, the benefits would be significant. So we would be an interested party to push the collaboration even further.
Local media have also reported that Equity is keen to acquire majority stakes in National Bank of Kenya, which the government intends to privatize by end of 2010.
The truth of the matter is I've never spoken about National Bank. I just responded to a question from our shareholders at an AGM when they challenged us to think about it. But it has never come on the table so that we could analyze it. It needs to come on the table, then it needs to be structured so that you know what you are responding to. For the time being, we would like to leave it to the speculation discussion that keeps us awake.
Going forward, the bank's focus is to collaborate more with telcos to improve on mobile banking, deepening its East African footprint, and with oil in Uganda and Southern Sudan, it is clear that the strategy is to be on the ground when the East African economy rides on the renewed economic wave.